Hello, I'm Ron Wilson and welcome back to PD Sessions. The RBA cut the cash rate to 3.25% in October after Australia's growth prospects were dampened by further softening of the world economy. Internationally, eurozone finance ministers launched the €500 billion permanent bailout fund, while the US saw positive developments on the jobs front. In other news, legislation to establish a trans-Tasman retirement savings portability scheme was released, while ASIC issued a consultation paper on how it would regulate FOFA's conflicted remuneration ban. Vishal Tekchandani has the details.
The RBA lowered the cash rate from 3.5% to 3.25% at its October meeting. The central bank said the outlook for Australian GDP was a little weaker due to slowing expansion in China and Asia and the ongoing European debt crisis. Despite the key rate being at a 3-year low, Governor Glenn Stevens said the RBA had more ammunition up its sleeve to cushion the Australian economy from external events, given that inflation is under control. Meanwhile, the ABS reported Australia's unemployment rate jumped 0.3% to 5.4% in September, even as the economy added 14,500 new jobs. However, the rise in jobs was offset by an increase in the total number of unemployed individuals, which jumped from 6.2% to 662,700. The participation rate, a measure of the total number of people either working or looking for work, rose to 62.5%. Internationally, eurozone finance ministers launched the €500 billion permanent bailout fund, putting in place a major defense against the debt crisis that now threatens to engulf Spain. The fund, known as the European Stability Mechanism, was meant to commence on 1 July, but its launch was delayed due to applications for its injunction at Germany's High Court. Some 37,000 people who applied for the injunctions had argued that the bailout fund was unconstitutional and could diminish Germany's sovereign rights over budgetary matters. However, the court ruled there were no grounds to halt Germany from either ratifying the ESM or the fiscal pact aimed at bringing economic governance to countries in the eurozone. Across the Atlantic, the US unemployment rate tumbled to its lowest in nearly 4 years as companies took on more part-time workers, while the number of self-employed also rose. Employers added 114,000 new jobs in September, and the unemployment rate dropped to 7.8% from 8.1%. The fall in the jobless rate was bolstered by revisions showing that employers added 86,000 more jobs than previously thought in July and August. Meanwhile, economic data suggested that the labour market gains may accelerate in coming months after improvements in consumer confidence and the manufacturing sector. The Consumer Confidence Index jumped to 70.3 in September as Americans became more confident about the labour market. Meanwhile, the Institute for Supply Management's PMI rose to 51.5%, indicating that the manufacturing sector is expanding again. The World Bank has cut its growth forecast for the East Asia and Pacific region's GDP amid lackluster economic activity in major export markets. It said the region will probably grow 7.2% in 2012, down from an earlier projection of 7.6%. However, the bank remained confident that domestic demand would drive growth higher in the region during 2013. In Australian government news, draft legislation has been released to establish a trans-Tasman retirement savings portability scheme, expected to assist the thousands of Australians and New Zealanders who move across the Tasman Sea. Minister for Financial Services and Superannuation, Bill Shorten, said the new scheme will help Australians and New Zealanders make the most of their retirement savings, as they'll be able to take their retirement savings with them when they move across the Tasman. Key features of the portability scheme include individuals may transfer their retirement savings between an Australian-complying super fund regulated by APRA and a New Zealand KiwiSaver scheme. Participation is voluntary for members and for super funds and schemes. Retirement savings will generally be subject to the rules in the host country, and New Zealand retirement savings transferred to Australia will be treated as non-concessional contributions and subject to the Australian non-concessional cap arrangements at the point of entry. The legislation is expected to be introduced into Parliament later this year and is likely to take effect from 1 July 2013. Turning to regulatory news, ASIC has released proposed guidance on the conflicted remuneration ban under the FOFA reforms. CP 189 sets out proposals for guidance about complying with the conflicted remuneration provisions and how ASIC would administer these provisions. The consultation paper discusses examples of conflicted remuneration, benefits that are not conflicted remuneration, benefits of small value, volume-based benefits, equity arrangements with representatives, performance benefits for employees, and anti-avoidance. In particular, ASIC confirmed that it would look at the substance of the benefit and the overall circumstances in which it is given to determine whether it is conflicted remuneration and therefore banned. A final regulatory guide on conflicted remuneration is expected to be issued in February 2013. Following a review of the funds management sector, ASIC plans to develop a good practice guide on risk management systems for responsible entities. In its review, the regulator found that the sophistication of risk management systems of responsible entities had varied greatly. ASIC found that smaller responsible entities tend to face key person risk where the loss of one or two people, either temporarily or permanently, may have a major impact on the operations of the responsible entity and the performance of its funds, and the risk of over-reliance on external compliance and risk management consultants without necessarily having the skills and resources to independently assess the quality of their services. The Good Practice Guide will be developed in the form of a consultation paper expected to be released in 2013.